Personal investment. In this section, I briefly examine two major personal investments undertaken by many individuals over their lifetimes: residential real estate and human capital. By personal, I mean that the assets acquired are the sole property of the individual. Residential real estate purchases, typically the acquisition of condos, houses, and land, provide the service of personal accommodation. While renting is an option, taking an ownership position in exchange for a one-time payment not only allows one to avoid rent, though other costs such as condo fees and taxes will be incurred, but also entails an investment whose profitability is determined by the eventual resale house price. Human capital constitutes the skills, relevant education, and job experience that people acquire, allowing them to earn income over their lifetimes. Just like physical capital, such as the plant and equipment necessary for the income-generating production of goods and services, human capital generates future cash flows, since higher levels normally lead to higher earnings. Note that tangible residential property and intangible human capital are real as opposed to financial investments, in the sense that direct claims to future cash flows, unmediated by financial claims, are acquired. This is true despite the fact that these investments are very often financed by borrowing, that is, issuing financial assets. In the case of housing, equity, that is, ownership, is the difference between the property's current value and any debt still owed. Chapter 11 deals with personal borrowing, so the financing issue is postponed. By way of preview, I do note that a residential mortgage is for many the largest debt ever taken on by a household, and the form in which it is done can matter significantly. Residential real estate and human capital choices are, at their essence, capital budgeting decisions. As discussed in Chapter 1, when firms do capital budgeting, the best procedure is to calculate the net present value of the investment under consideration. If the net present value is positive, undertaking the investment increases firm value. The same holds for personal investments at the level of the household. Adopting positive net present value investments increases household wealth and is therefore a good course of action. As for other investments, the costs and benefits need to be compared. For example, in the case of human capital, the benefits are higher earnings after the acquisition of human capital, while the costs are foregone earnings during the time when training or education is received, plus any direct costs such as tuition. Difficult to quantify intangibles may also be present. For housing, these may include the positive affect induced by ownership and whether rental properties with the desired features are truly available.